Hey, what's up, everybody? Round two. Second burst, same as the first. A little bit louder, a little bit worse. All right, here we go. Um, Still waiting for me to verify my bank, even though it already took my money. So the transfer hasn't completed, but it gave me buying power. So we're going to go ahead and go through this. We're going to talk about. Um, we're actually going to see, add the money. I had to do 500 just as a minimum because this is actually a different account type. This is not a taxable because they could only let me do one at a time. And I had some other options, but I wanted to stick just with the normal routes here. So we're only going to put $10 of this to use, which will mess up the graphs and the charts and all that. But hopefully the trading account blows up and we'll get this 500 put in. We'll get back to track. Um, I just really committed to help people learn how this works and how it worked for me. And I just felt like if I just showed my regular account, it has 100 positions in it, that would be pretty overwhelming, you know. And if I had $10, I wouldn't buy 100 positions anyways, right? You can't put 10 cents in each one. Um, so that's the deal. We got $10. We're gonna go ahead and get the transactions done here. How's this work? Oh, that's what we want to do. Buy, sell. It's not letting us. Come on. Must not be quite ready yet. So let's take a minute and talk about why we do what we do. So this is the SP 500, and it's went up your whole life. If you want to do a Googling exercise, go ahead and check out dollar cost averaging, the S&P 500, and you'll see just how well folks do. And there are a couple of reasons why this happens. Number one, it's diversified with 11 sectors. Um, and if a company starts doing poorly, since it's based on market caps, they will get kicked out of the index and the next in line will get put in. So you have a level of protection there. It's the best of the best. You also get uh, a big benefit when stocks run. Now, if it's such a great deal, and everybody always says buy the S&P, buy the S&P, right, or either VOO or anything like that, then why would I buy anything else? And the reason is cash flow. So if you look into retirement accounts or how to fund your retirement, you'll see the 3% or the 4% rule and all that, where you take 4% out of your portfolio every year and you should keep you in perpetuity or damn close to it. Problem is market volatility. And I don't like the idea of having to sell shares to pay bills. I just don't like that. So if 4% is good enough, then what do you think? 5% Duke Energy or Southern Company or oil companies or tobacco companies, high dividend real estate REITs, they already pay that out in cash. So I don't have to worry about losing the amount of shares by having to sell stuff. All right. I'm really addicted to the cash flow, and I treat each position like a rental property per se. It's not as good because of leverage and other things like that, but I don't have to do any work either. So that's a huge plus for me. Um, the reason I choose the SPY is because eventually I'm going to be setting up a foundation for charitable works, and there are some tax advantages that I can take advantage of by transferring stock, and I would also like to play in the options realm. So that's why I choose the S&P. There's nothing wrong with the VOO or anything like that, especially if you're not going to sell it ever and you're just going to stack it. It's probably fine. But that's why this is a big part. And plus, this is a benchmark. So if half of the account is in this, then we're tied to the benchmark. So all we have to do is outperform on the other half, and we're there. But we're never going to way underperform because half of our account is the freaking benchmark. So you got some safety there. And plus, in my own personal account, We won't be doing it with this account, but eventually we might switch over and start showing my full account. But I use leverage. So I only use a very small amount, but I think it makes a huge difference over the long run. I use 10%, which is like nothing, but it gets the ball rolling. So the other position we had in the portfolio was the XYLD. And what this is it sells covered calls on the S&P 500. So it's tied in a way to the benchmark as well, even though there are other things that factor in. The big thing that's attractive is the yield and the fact that it pays out every month. So with having two positions, we can get a monthly check. And right now it's at a 13% yield. So a little over 1% per month. Okay. So that's super attractive. So we could start getting a monthly check now off of $10. It's likely to be like a nickel. But when you're going to high yield stuff like this, the one thing you want to see, now this one doesn't have a huge long track record, so it might be too risky for you. And you don't have to do what I do. Do your own research, make your own decisions. But I like this one. But what you can see is there's no erosion of value. So it started here and it's about right here. When something pays out a huge dividend like that, that means that all the gains are being paid out. So it shouldn't go way up. But if you do the average between this one and the S&P, my portfolio average is about 7 to 8%, which is pretty good. 8% in cash. And hold the 4% rule to its feet, and you're doubling it. So that's my approach. That's why I picked the ones I picked. There for a while, I was actually selling covered calls, and I can just make way more money trading. If you look at the blog, links in the description, you can see that I'm flipping stocks every day. It's just such a higher return. Now, in my emergency fund, if we ever get that far and you folks show some interest, I might show that. But I'm selling puts in that. So if you don't know, when you sell a put and it gets executed, it's tax-free money. So we do that and just hang on. And if we ever do need the money, then we need the money. But we're going to get a 25 to 30% return initially for the first year. And then we use that money to buy stuff like this that kicks out cash flow. And it's really interesting. If you'd like to see it, leave a comment. I do have the comments on. I just got them to approval only. I'd hate to see anybody get swindled. And there's a lot of noise out there. But if it's a good comment, I'll approve it. If not, don't get butthurt. That's just what it is. There's enough noise in life. But those are the things that we have in there so far. And there's no way we can... It says buying power. I know it hasn't cleared, though. So the cash here. I guess we're out of luck. We'll wait for it to clear. But I was really hoping to get in here. I ain't going to lie to you. Looks like I'm sorry out of luck. So we'll end the video there. Hopefully we will get into actually buying some stuff. I'm anxious because I really feel like the market is ready to rip. But we'll see. Have a good night. This has been a doubleheader. Hope you are doing good. I hope this kind of explains why I'm doing what I do. But it really will just take you time. And every transaction we make in this account will walk you right through it step by step. So hopefully you can learn from it, make your own decisions, make your own pies. This auto invest here is the reason I feel like this is the best brokerage on the market for a buy and hold account. Because instead of a dividend drip, you can buy what's on sale. It just makes so much more sense to me. But use whatever you want to use. I hope you all are doing good and selling stocks. We're on a bullish run. And we'll catch you tomorrow.